Well, hello everyone. Good morning. This Luis here, bringing this morning Option Trade Ideas 101. This week we had a lot of earnings going on. We have Disney, ARM, the two kind of like big cap, I think, as I can say. But ARM this week particular is gonna be very important because Nvidia also come up at the end of the month on the 22nd, if I'm not mistaken. So right now we're looking the chart for ARM on the 4 hours, and over the weekend I was studying something about open interest and put call ratio. That's the kind of like the idea. There was a lot of those investors actually in Wall Street. They try to work with those numbers. So to see the put call ratio, it's let me bring it for you guys here on another screen. Put call ratio. So you say put call ratio is a measure that is widely used by investors to gauge the overall mood of the market. If the traders are buying more puts than call, it's a signal a rise in bearish sentiment. If they are buying more calls than put, it suggests that they see a bull market ahead. So they have like a number. Let's see if it shows over here. Okay, the average put call ratio for equities is 0.7, considered a good basis for evaluating sentiment. It's helpful to watch put call ratio to see how the market view recent events and earnings and all kind of stuff. Put call ratio is used as an indicator overall bullish bearish market sentiment using market data supplied by the relevant exchange, most of the CBO. How do I interpret it? A ratio is 0.7 is considered mostly neutral, while a low ratio below 0.5 indicated an extremely bullish market sentiment, and a reading over 1 indicated extremely bearish sentiment, for example. Many traders use the extreme put call ratios as a contrarian indicator. For example, put call ratio 0.3 indicated extremely in bullish market sentiment, suggesting the market may be ready for a pullback lower and that a short position may be worthwhile. A reading of 1.2, on the other hand, suggests an extremely bearish market sentiment that could see the market rebound in the near future, potentially suggesting a long position in the underlying security. It's getting more complicated as I read. Bottom line, the put call ratio is a very helpful tool gauging whether the market outlook is bullish or bearish for a particular security. On the index itself, low rated numbers like 0.2, 0.3 suggest the market sentiment is extremely bullish, while reading on 1.2, the market has become too bearish and may be due for a bounce. Okay. Saying that, reading all days from Investopedia. The put call radio on ARM, it's kind of like for this week, it's very bullish. Okay. But for the following week, the 17th, is very bearish. It's getting more complicated. Trying to figure out this thing, but so looking at my indicators, that's what I'm seeing right now. We have a big resistance on $130. This is like not. They started last year in October, actually September. I remember clear, like they opened on something around 50. First week it traded in the 50, open at 56, high 69, low 55. Even I bought a share for like 50 something dollars, but then it went down to this lower candle here to 47, 46 low, close at 49. So I kind of said, I'm not gonna hold this. I don't know if you go anywhere. Even I kind of like thought about it, but again, for over like the millennium time that I did it, I bought like at opening thinking it was going to be good stock, but then I sold in low, buy high, sell low. Kind of stupid of me to just kind of hold it with a profit. Like one stock I would have tripled the money at the high. So anyway, so on the weekly chart, we don't have much going on. They didn't show me anything over here. So let's go. I put a note here and a 1 hour chart block. So let's take a look at 1 hour. So there could be, well, I don't see the note in the 1 hour, but this is the block. This is one of those blocks right now that kind of like represented bearish situation. Market's open.
Flyer figs, and at the NASDAQ IT company Cognizant, celebrating the LPGA Tour's Cognizant Founders Cup. Jim, as we're going to try to work our way above the 50-day here for the first time in a few weeks.
I mean, what we want to do is we want to watch Apple, because Apple was a big driver last week. And that was a surprise driver that I think people can really get behind. We're still working the prospect that Alphabet Google is better than expected. And Amazon, I just think, crushed the numbers, but had the misfortune of reporting on a day when we were concerned about whether rates were going to go up. So I think that there's just a lot of things that are just trying to catch up from last week that are positive.
Right. You made the point last week that it's kind of nice to have.
So I'll bring them CNBC back later on. But anyway, so what we have right now, we have NVIDIA is trading, hit the high A96 at the open, 95. I think they talk about the earnings for this week.
It would be terrific if he did the same thing he used to do, which is let people know exactly how the quarter was configured after it's reported. I hope he does that again. The banks seem to be playing some catch-up, which does matter too.
David, Jim mentions Disney, and in fact, Deutsche today goes to 130. Loop goes to 140. They think
Disney
Alan
130.
Gould thinks that streaming losses are maybe ahead of guidance, and they say Iger gave a master class in how to beat an activist.
Yeah, I'm not going to disagree in terms of some of that. Jim might, but listen, it is still very much a focus on Disney Plus, on direct-to-consumer, on the efforts to get that.
Disney got our earnings this week, so I don't know if worth the play because they don't move as much. Had a call for 130 from Goldman Sachs, so I don't know if this is going to come and play. But let's take a back an analysis that we're doing for ARM that they're not talking as much. If they bring the ARM, I bring to you guys. So ARM. So in the put call ratio, so the 1.7 and 1.7, the 0.7 is neutral. Below that is they say it's bullish. Higher than that is bearish. So let's take a look. I think I can bring it Yahoo Finance to see it. And also this one might be a good one too. Wow, what a face. No, it's not here. Get out. Get out. Finance. Oh, also it might gonna be a good idea if I can bring on a MSN. But I think here I can pretty much can do the math. So remember, 0.7 is neutral. We have 1.7 or 2 or 3 bearish, and 0.03 we have bullish. So we go to options here. I believe I can see it. So in the money, all strikes, let's do straddle. So straddle in the money. Say 104. Okay. Puts in the right, calls in the left. Okay, let's bring this in a bigger view for you guys. Alright, this is Yahoo Finance. So the calls on the left and the puts on the right, but we do put call ratio. So which is the put, we divided the put by the call. So if you divided the put by the call over here, 105, so it's 500. Well, we're looking at open interest, okay? Not the volume. Let's see open interest. Yeah, open interest, the last. So we're looking at open interest. And then divide 523 divide by 1047. So we have a 0.49 on this put call ratio on a 105 strike from ARM, which is indicated bullish. Okay. If you go out of the money, it's still like the calls is higher than the puts. Now, what I notice, we see the May 10. Let's take a look at the May 17. So what I noticed on the May 17, if you look the same for what's gonna be the following week, okay, after the earnings, on the money. So the put on a 105 straddle, it's 1,700 divided by 779. Becomes a 2.18 put call ratio. So this is like indicate a very bearish scenario after the earnings. So that means like they are bearish on this. I don't see it Oh, I see like out of the money here, like 111, 112 straddle, kind of like on the bull side, but pretty much I would say 90% of the strikes, they are on like this one $90 strike. We have like 2,000 contracts on the put side against 700. So open interest. So meaning like out of the money, even like a 125, 130, actually the 120 straddle. Let's see this one. This might be bullish. 2,791 divided by 4.7. Yeah, see, this is a 0.6, which is either neutral, close to neutral, towards the bullish side, the 120. So they think like it might be a 120 price for ARM coming up. But so how do I read this put call radio scenario? So for the stock, so as right now we are profit $100 on this play that we have. Let's go back to the save account. $73 today, return total 105, because I told you guys last week, look, the volatility already moved to 117. If you look at the other video that I have, the IV is in this particular stock is the one actually that we are profit, because the put side is 92. Let's see. It's trading right now. I think I purchased this for 200, so it's down 100%. And this one is trading at 400. The IV is 97% over here, 96%. And the IV here is 139%. It went like ballistic up. So this might gonna move a little bit higher as the day goes on the price, or maybe gonna stay that way because of the IV, you know. So let's bring this. So that's the chart that I have. So now the 1 hour had become almost we see this candle still inside, like in a, because it's still 18 minutes to go to the market in this side of the, but this block, the bear block over here, it's kind of, we almost like breaking this up as it go. So I see 6 charts right now. That's what I'm looking at. So the intraday, I see 1, 3, and a 5 minutes for the intraday. So how do I read this? I read it like the blocks, all my signals. Right now it's bullish big time. And all 3, let me see the 1 minute back again. Yeah, bullish, everything green. Big block here, build, pushing the stock going up. 3 minutes also out of this band. Big candles, green. And this one. So this is my midday, kind of like before earnings. Midday before earnings, my 15 minutes now that I'm using. and to read the earnings, actually, I take a look like the 1 o'clock and the 2 o'clock earnings play, which is just got the long range try on a 2 o'clock, very bullish, pushing up 4%. Now, to take a general look, if you want to go more into depth, see what's the possibility. I mean, ARM is like great because ARM can move a 10% on a day or 15% on a day. It did it before. It might go that way. It can go back 8, go 15 up, and then go down 7 and go, very volatile stock. So in a day, they have a big pressure for this bear block over here on 127. And as you can see here, if you look on the day chart, we are bearish going to the earnings. Okay. Weekly, I already took a look, and we don't have nothing on weekly. So, but pretty much like that's what we have. So the time to trade, it's 10:30, 10:45, 11. That's pretty much what the big orders coming in. What I like on OptionsTrade, I'm gonna bring you guys back over here. It's the live flow, and then you can just go live for everything pops up, or let's take a look on the one that we particularly watching, ARM. So right now, look at ARM. They are bullish, but not very bullish still right now. And also, like, if you look at the plays, this guy, the stock traded 105, 3% gain today, and he purchased 9:30, 9 a.m. 100 contracts for 100 call for $900, which is the volume and open interest 770. So he thinking that this is probably gonna double, triple from here. The call, I think, is 120. I'm not sure on the street, but something like that. This guy's bearish on the stock at 943. That might be the same person. Maybe put a 3 plays, try to cover himself, because if he got right, he has to sell this quantity of 234 contracts times 100. So 234. So he has to sell 23,000 shares, 109. And if the stock go all the way up, he has 23,000 shares of this ARM contract. But also, he purchased 100, so it's 10,000. Huh? So he purchased 100 contracts for $94,000. And because here, if he collected $133,000, if the stock going down, he collected this. Let's see it. It's open. It's the max profit. Infinity, but the margin is $1,700. The max profit right now is 570. Oh, max loss, infinity. Max profit is 570 of times 234. Yeah, so $133,000 on the profit. He makes it if the stock go down big time. But then let's see here. So he will lose. So he will lose 100,000. He will lose this one. But actually, he's gonna lose this one because this one kind of like. Maybe this two it's the same. The 134, 133 is the same. Because as you can see, the guy sell the stocks at 109, but he gonna make a lot of money over here with the 200 contracts. So the buy, I just see now, the buy is 180 price at target. So what? Oh, it's not mine. Scare me. All right. So total return 111. Today, $80. We're in a good spot. 180 call, so it'll go all the way here. So that's what I have. I have a put for this week and a call for next week. So either way, or either I just hold display for the earnings. So what's gonna happen if the earnings bad and stock drop, but then drop below $90? Say like by earnings, the stock is like $115 and just dropped to 100 on the next day. That kill me because it kills the call, it kills the put. Okay. Now, if you're coming to the earnings and the earnings good, we're in a bull market, or the bull from NVIDIA is already like going ballistic, 908, sorry. We're already going 2%. That means they're pushing it for our earnings. They're pushing it really hard. SPX 515, so its pi might be 514 already this today. Let's take a look. Yeah, 514. Open at 513, so I don't know if I'm gonna wait. If I do play some here, look very bullish at this moment, but the 1 o'clock showing me this two bears over here kind of might hold. So if it is disappear, we might be able to open some long positions. This might disappear because this one. Interesting. Microsoft 408. So pretty much like what happened at this moment is not just NVIDIA, but the whole semiconductor. I see SMCI is moving up. NVIDIA is already like in the 900s, and ARM It's moving 4.5-5% right now. So pretty much like if Nvidia moves to 4-5%, which is might be easy because already pretty much gonna clear this short position. Let's show you guys. What's that? 2 hours? Yeah, 2 hours. Have Nvidia over here with the bear OB, whatever. Yeah, bear OB. So if you clear this, we're good to go. And as right now, ARM, it's let's take a look in the 4 hours. So the 4 hours have this gap going up to 126. 1 o'clock still showing me this bear. Same thing with the 2 o'clock on the Nvidia. Let's bring both like side by side. So this is the right hand side is the left hand side is the Nvidia, and this one it's ARM. Nvidia moving close to 3%, and ARM is moving close to 5%. So play just went up big time to $130, and yeah, see it dropped like a little, not as much, but this going up big. Open interest 305 is still, the volume is 24, so it's still like pretty good. IV actually went down a little bit, 116. I think it was 117. Right now 117. So the IV on calls, it's 97, and still 136 on put. Yeah, this definitely is gonna be a play before earnings, because I don't want to get crushed on the on the call side, you know, because this probably like it gonna hurt me if the earnings is bad. Say if the bear side and the pull call ratio for the following week is right, which is higher. So Carvana is moving 4%. Oh my God. Jesus. The guy was putting like how can this be a flip at $6,000? Morgan Stanley raised the price 75 from 45, and it's moving 127. Unbelievable. The shorts has to cover. That's the problem. And then they losing like already. They lost already. They lost already $4 billion, something like that. So this could be like the new meme stock at GME, because it was a lot of short position.
I can have a David sitting here and like what I say and smile.
That's why he's scared.
I'm ready.
Yes.
I'm ready. That robot is the robot I've been waiting for all my life. But the robots that Jensen Huang from NVIDIA has are very are robots that I know that Musk likes.
Yes.
Musk likes.
Yes.
And that's important because Tesla has a good relationship now after a rocky one.
Really quick tonight.
I got Judy McReynolds from ARC Best. I think that there's nothing like analyzing the trucking companies to try to figure out what's really going on in America, which we have to, since it's so important.
All right, we'll see you tonight. Mad Money, 6 p.m. Eastern Time. When we come back, more from David at Milken, including interviews with Goldman's David Solomon and Exxon's Darren Woods. Back in a moment.
So to finish my thoughts over here on the ARM, we're gonna bring probably like a closing bell tonight to see how it goes. 33 minutes already, like going to 10 o'clock. Normally we have a little retraction at this point, but actually for now on it's like pretty much like pushing the price up. Like I say, this has a tendency to move daily right now, like even like Tesla and everything else is moving in the 3% average right now. So we're gonna bring this afternoon, see how it goes. Probably the shorts needs to cover the position, and then if they have to, they're gonna have to push the price up before the earnings, just in case they miss something. But pretty much like I'm gonna concentrate in this one right now, and am I gonna do something with the SPY? Let's see how SPY moving it. Look like right now it's it could be a little short on the SPY because this 4 hours. And the 4 hours is still good for 2 hours. 2 hours show me 504 big buy, long position, and I think we're good. I think we're good to go. 1 hour, yeah, 1 hour. The resistance is right here, guys. Look at that. The 1 hour resistance. You guys thinking this is gonna hold it? Oh, let's make a line over here. Let's move for red. Let's go back to the 15 minutes. So we have this. This for the 1 hour line as the resistance for SPY. All right, guys. Always thank you for watching this video and have a good day.